The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the May 22nd, wonderful Wednesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that just simply empower human potential, because living up to our potential is something we must master each and every day. So let's begin with an empowering belief or two. And this morning's belief is brought to us by none other than James Allen from his book, As a Man Thinketh. Folks, do you have that book, As a Man Thinketh? From 1902. Now, the aphorism, As a Man Thinketh, in his heart, so is he, not only embraces the whole of a man's being, but is also so comprehensive as to reach out to every condition and circumstance of his life. A man is literally what he thinks, his character being the complete sum of all of his thoughts. And you will realize the vision of your heart, be it base or beautiful or a mixture of both, for you will always gravitate towards that which you secretly most love. Into your hands will be placed the exact results of your thoughts. You will receive that which you earn, no more, no less. Whatever you present, whatever your present environment may be, you will fail, you will fall, you will remain, or you will rise with your thoughts, your vision of your ideal out there. You will become as small as your controlling desire or as great as your dominant aspiration. You cannot travel within and stand still without. How about that? That is from our man out there. Well, I like to think he's our man, James Allen. As a Man Thinketh. Right now, we've got let's go take a look at how the markets are thinketh. Right now, we've got the Dow up 89 points. They're liking the notes here from Uncle Ben, up 90 points, trading out at 15,477. The S&P out here, so 15,475. That says the Dow wants to go tag 15,500. S&P traveling at 1679.63. That's up 10 points. Composite up 20, trading at 35.21. Russell 2000, the leader in the clubhouse, up 0.7%, up $7.20 right now. Google back $2 and change. Apple up 6 and change. Microsoft down 27. Intel up 26. And Cisco basically flat out here. Cisco had a big trading session a couple of trading sessions ago. Leader of the clubhouse right now, we got Regeneron Pharmaceuticals. They're regenerating out here. That's up 3%, up $7.63. Apple just behind them. Biogen, BIIB, no surprise there that is up another couple percent, up $6. Pioneer Natural Resources, PXD, up 5.79. Celgene on the move this morning. CELG up 4.57. Cree up 3.38. We've got the GLD up $3. That's up 2.5% this morning. Rand Gold, GOLD, one of the stronger gold equities out here. That's up 3.20. That's up 4%. We've got BioMarin Pharmaceuticals, BMRN, up $3 out here. Toll Brothers out with the numbers. They're up 8% this morning, up $2.83, trading out at 38.82 out here. Whirlpool having another nice day, up $2.48, trading out at 133.45. To the downside here, we've got Priceline off $8. They went ahead and completed their deal with Kayak Software out here. That's really what is behind their move to the downside. We've got SolarWinds, SWI off 10% this morning. That's off $5 and change. Google off a few bucks. Target, TGT down $2.71. Amazon off about $3. Catamaran, CTRX off about $2 here. Tempur-Pedic off 4%. I don't know if they were out with earnings. Let's see. TPX is the ticker symbol. No, they were not out with numbers. You've got Carbo Ceramic, CRR off $1.80. Down 2%, SodaStream, SODA. Our call number is 877-927-6648. Let's start off. Uncle Ben, I saw a comment, said Uncle Ben says that the euro, things in Europe are getting good. I don't know what headlines he's reading out there, but I haven't seen a whole lot of positive headlines coming out of Europe. But let's go take a look at the Queen here. He's the king, and the euro is the Queen. Right now we've got the euro here trading out at 1.2993. And what the euro has done off of the highs here, its most recent highs on May Day, out at the 132.41 level, went from there all the way down to a low that came in on May the 17th. That low got down to 1.2795. That was just over a 0.786 retracement of the swing point low to high. Well, the high was May 1st. The swing point low was the low that came in on April the 4th, out at 1.2743 out here. Did more than a 0.786, but what we did see, we saw some bullish candles here form over the last couple days. And now with the euro, what the Queen has done is it has gotten above that swing point from April 4th. 1.2947. So now let's go take a look at retracement now from the swing point high, again May 1st, to the low that came in here recently on May the 17th. So I'm going to go ahead and get rid of this one. And let's go ahead and get rid of this consolidation box out here. Let's just clean this up, make it a little bit easier for all of us to take a look at. So now let's go take a look at this on the daily chart, and what is it that we can expect? Well, so far, what we've seen here is we're above the 0.382 retracement level. That number is 1.2965. If the euro closes above that today, then what you will see is you'll see a move to good old sweet 618 out there. What other numbers do I have on my screen here? Let me get rid of this here so it makes it a little bit easier. Yep, that was it. The 0.618 retracement would be 1.3071. You can see neither overbought nor oversold, so it has room to run. So that is on the daily chart. Let's go take a look at the EKG of the euro out here. That means we're going to take a look at the 30-minute chart. Let's see what it is doing. We've got our four little moving averages up here. You can see that the 8 is above the 21, which is above the 50, and above the 200. So you've got some momentum to the upside out here. Let's take a look at A to B equals CD patterns that are forming. We can see that the euro on the EKG, on the 30-minute chart, has reached that extreme overbought territory. But let's take a look at the A to B equals CD pattern here off of the low. Again, that low coming in now at 10 o'clock in the morning on May 17th. That level, 1.2795 out here. That's your A point. Your B point is going to be the swing point that comes in at 7 p.m. out on May the 20th. That high, 1.2902. Your C point is the retracement. We'll take a look at that, what that retracement level was. That was coming down into low at 7:30 yesterday, May 21st, out at 1.2840. So now, let's go take a look at the retracement. It's important to understand what that B to C retracement is. And as we take a look at it, just about a 618 retracement out here. 1-to-1 A to B equals CD. Well, we've blown through that, not we, but the euro has. And now you can see it's taking on that 1 to 1.272 area. So if it goes above that, 1 to 1.618, we'll take you to 1.3014. Now let's take a look at retracements here. Now let me get rid of this. this B to C retracement. Now that we know that we had that out here, and let's take a look at the retracement off of this swing. We're going to look at them off of a couple of different swing point highs. So we're going to look at the one from 5:30 in the morning, that high 1.30276 from May the 14th. So let's go from that high all the way down to the low that came in here, and we'll see that we're right now at a 0.786 Gartley sell pattern. Now, what you don't have here on the 30-minute chart is you do not have a bearish candle. So without a bearish candle, you would not take that sell. But coming in right about the area where it's made a 1.272, A to B equals CD is also the 0.786 of that retracement level. Now let's go up to this high up here. Let's go to the high that came in on May the 8th. That level, 1.3193 out here. So we're going to go from that high down to the same low out here. We're going to use that same low for our swing points. And let's do the measurement as soon as I get my tool down there. Well, let me do this here. Let me change the colors on this, make it a little bit easier for you to see something. Now we can see on that retracement, we are above the 0.382 for sure. The 0.618 would take us up into about 1.304 out here. So what does that say? That says that if the euro does not show any kind of bearish candlestick here, what we will see is the euro move up to 1.3041. What will that do? Well, that'll put some weakness in the U.S. dollar. That'll go ahead and put some strength inside the markets out here. Let's go out to Kentucky to Bob in Louisville. Bob, thanks for calling. Thanks for holding. How are you today?
I'm fine. Thanks, Steve. Thanks for taking this call.
My pleasure.
Hey, listen, gold just spiked up, and I'm wondering if, we spoke earlier about gold being way too many shorts, and those shorts are eventually going to have to cover. Do you think that's what this move is about?
Well, there's no question that we've got that tale of two stories out here. So the big money, they have positioned themselves from a long standpoint. They've been doing that here for a period of the last couple of months or so. And, you've got the individual, the non-reportable traders. They are at their largest net short position. So any kind of spookiness out here is going to cover some significant short covering rallies for sure. And so, is there going to be some of that going on? Absolutely. I mean, because they are at their largest, at least they were through last Tuesday. I don't know what's transpired since the close of business last Tuesday in the CFTC COT data that's out there. So are you in a position, looking to get into a position? Tell me what you're doing.
No, I already own some GLD.
You do?
I mean, on the short side.
On the short side out here, okay. So on the short side, so you're maybe like if you were on the option side, you'd be one of those non-reportables that they would be taking a look at out here. What you've got to be paying attention to, in my opinion, is on the gold contract. What you want to be watching is this swing point from April 16th. And that high out there is 1404.20. You're at 1406.80 right now. So if we take a look at what the candles are telling us, when we take a look at now, you're taking a look at the GLD. I'm going to actually go take a look at the gold contract here just to get a little bit different perspective, from a candle standpoint. And so we had that first piercing candle as we came off of the lows here on May 20th. So the bulls were out there on that trading session. We gave part of those gains back yesterday, but it's still, I haven't done the actual math on it, but it's still close to either keeping or maintaining that piercing candle. But what you're getting right now today is you're getting obviously another bullish candle, and this one here is a bullish engulfing. So here's how I would go ahead and are you in the money on this trade?
No, I'm the spike put me a little bit out.
Okay. So here's what the message of this market would be giving you. If today's close is above on the gold contract is above yesterday's open, 1392.40, you'll have two bullish candles here over the last four trading sessions. And so that would be saying, well, you've got to take into account you're going to see some short covering rally going on here. There's no doubt about that. But the question is going to be, if you get a close above this high out here, which is 1404, that short covering rally, that can take you, whether it's short covering rally, whether it's a bull run, whatever it might be, can easily take you up to 1535 in the gold contract. And the reason that I say that, Bob, is that when you break a consolidation area, what typically happens is that consolidation area gets tested to see if it was really a break. And we had a big break, but that level hasn't been tested. But if you can stay on through the break, we'll go right back to you. We'll take a look at the GLD as well. All right?
Okay, thank you. I sure will.
Okay. 877-927-6648. Dow's up 117 right now. S&P is up 14. We'll be right back.
TFNN is excited to launch our brand new software charting program, The Art of the Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, Art of the Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. Art of the Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Steve takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We've got the Dow up 131, S&P up 15 right now, and we're going to go back out to Louisville to Bob. We're taking a look at gold. He is in the GLD. He's on the short side of it. So, Bob, what I first want to do is we're going to come down and we're going to take a look at the gold contract. We're going to take a look at a real ultra short-term chart. I've got the 10-minute chart up on my screen. Now, are you watching us on Tiger TV by any chance?
I am.
Okay. So on Tiger TV, I've drawn in two patterns here. And the first pattern that I drew in, it's the one that is, it shows up as light blue on my screen. I don't know what is what color is coming across on your screen.
I have blue.
You have blue too. Okay, great. So what we're taking a look at is a butterfly pattern that formed out here, a butterfly cell pattern. That was a 1.272 expansion. Now, what that is, I've taken the swing point high, again, a 10-minute chart, right around 140 yesterday morning, right at the price point of $13.99. Let's just call it $1,400. And so I went from that swing point high to the swing point low that came in here at 10:10 in the morning yesterday, and that was down at $13.58. And that set up our in being able to identify an expansion from that high to that low. What gold actually did out here, as it spiked at the 10:10 time frame, as it got to 14.13, it made a 1.272 butterfly expansion. Now, what it's doing, we saw that spike it with some significant volume there. So you did 23,000 contracts during that, and now it's backing off a bit here. We've got a second pattern which is the A to B equals CD. And your A point starts off at the lows that were put in at 1:40 in the morning on May the 20th out at the 1340 level. That would be your A point. Your B point is the same X point, in essence, that we used at at the 1400 level. And then your C point was the retracement. Now, if we take a look at that retracement here from the A to the B, so we're really trying to measure that B to C retracement, what we'll see is it did a normal retracement just below the 0.618 level. The 1-to-1 on that was 1417. So we had gold spike up to 1413. That completed the 1.272. In my book, that really completed the 1-to-1 A to B equals CD pattern out here. And that, in essence, because it had pulled back to the 618 level, that says, okay, that would be reasonable that that's what it should have done. So now what it's doing the normal thing as well, because you had on the 10-minute chart, you had to get into the overbought territory. So what's really going to be key here for you on the short side and what you're going to want to monitor is how is this pullback now? Is this just going to pull back into the breakout area? And that breakout, again, is a 10-minute chart that we're looking at here, because I gave you, before the break, I gave you the view on the daily chart of what you should be looking for. Now on this ultra-short-term time frame, this 10-minute chart, the key is going to be what's that pullback? Is this going to just pull back to 1386? And if it pulls back there on less than 23,000 contracts and starts its move higher, all that this has done, all that gold will have done is come back to a breakout area. Again, this is, a much shorter-term chart, a 10-minute chart. But what it does is it helps you to identify the patterns that are going on inside. This is the normal, natural patterns that are going on inside the marketplace. Now, the question would be is where's the normal retracement levels to be able to measure this? And what we'll do is we'll take a look at that butterfly. And the normal retracement would be to the 618 level, which would be 1379, which would take it down below this little breakout bar from 10:10 a.m. So that's where you would expect it to move down to. And if that area then gold starts to move up, well, you could continue to see some additional short covering rallies out here. I mean, Uncle Ben isn't doing anything to spook the marketplace and tell you otherwise out here. And so knowing that there is such a preponderance of shorts out there in that group that the CFTC refers to as the non-reportables, they are the ones that are going to fold their cards first. And that could lead to just a massive short covering rally out here. So, I mean, does that help you? Or tell me what question you have that I've just confused you about.
No. I'm with you on that, on all that. I was looking at that spike up. It's much like that spike up, which even had more volume, and you're pointing to it right now.
Yes.
And that was Monday. So,
yes.
And then, so if this is more of a short covering, and then also, Steve, also another point you made a long time ago, and you guys talk about it all the time, and that's that when news like Bernanke is coming out, whatever the result of that, which will probably show up tomorrow, today we're going to see the reverse. So in other words, this spike up in the Dow also could be, a premonition of, the market moving down.
Could be. It could be.
Did I explain that correctly?
Yeah, no, I know what you're saying. You're saying, hey, look, the first move sometimes is the wrong move.
Right.
In this case here, the wrong move so far has led to a 150-point move inside the Dow and a 17-point move inside the S&P. So right now it looks pretty healthy. We'll have to take a look at volume. So that's what, you've got it here. Just watch these charts on these time frames. I think that'll help you out.
Okay. Thanks, Steve.
All right, Bob. Thanks so much for calling. We get back, we're going to go out to Concord, Mass.
Tom's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Right now, we've got the Dow is up 122 points. The S&P is up 14. Russell 2000, leader in the clubhouse. Well, actually, the Dow is the leader, up 0.8%. The Russell 2000, just a nose behind them, 7.76%, up $7.60. We're going to go out to Concord, Mass. Boston, strong out there. Folks, if you're a hockey fan, Boston is just shellacking the Rangers out there. Mark, how you doing?
Today.
Uh-oh.
I'm
Mark,
doing fine, Steve. How are you today?
Oh, I'm doing great. Are you watching any of these Boston Ranger games?
I haven't really seen it because I've been busy on my own little project. I just got done writing my latest short story. I write short stories for a hobby.
You do?
I do. I have a collection of about 6 or 8 of them, which I've done over the years, and I've been spending the last couple of days not in the market, but investigating e-publishing companies. So I'm about to become an author.
Oh, that's great. Very admirable out there. Well,
my latest one is not so short. Well, I write in 14-point type, but when I proof it, I go down to 11. And 11-point type, it was 436 pages, so it's quite a long book.
Yeah, 436 pages. Well, then tell me what's your shortest short story, because certainly this one
was in 14-point type was about 200. So
200 pages.
11, it's about probably just over 100.
So now, what type of so you said you're on your fourth one? I think I heard you say your fourth one. Is that correct?
Fifth or sixth.
Fifth or sixth. Okay. So do they all fit the same kind of genre?
No. One was like a Da Vinci Code. One with two different endings was a sci-fi. One was called the Spying Government, where they repealed the Freedom of Information Act, and all newborn babies had to have a electronic chip put into them, and the government could track them. And the latest one is another twist. It's about 3 high school kids, and two of which, 2 girls and a boy, and the girls want to be Catholic sisters, Catholic nuns, and the boy doesn't go to any church, and what happens to the 3 of them in their senior year. So, and that book will have
very cool.
That book will have 4 or 5 different endings, all completely different.
Okay, so you're going to make it like an e-book, and the reader can choose whichever ending they want, or they get to read all of them?
Mm-hmm, exactly.
That's that very admirable. Now, how do you get yourself into the zone of being able to write? Is that an easy thing for you just kind of to slip into?
I was talking to someone yesterday who asked me the same question, and it's just a lot of things I see, and I could be driving, hearing something on the radio. Sometimes I'll hear something either on the news or actually I've gotten inspiration just from listening to different people on TFNN, and that may lead to something. That will lead to something else, and I say, well, gee, I can twist that around and put that into a book, put that into a line in the book or something like that. I have one.
Cool.
I have one. I'm going to. I'm not going to say what it is, but I may take one pretty close to after listening to TFNN. When I write it, I'll send you and Tavi a proof of the copy. So.
Love to. Yeah, love to read any of your work out there. So very commendable. Thanks for sharing. Thanks for sharing that with us.
Yeah. What would you like to? If I sent you one of my unpublished, would you like the Spying Government, or would you like a sci-fi?
I'm more of a spy thriller kind of guy.
Okay.
I love those. I love those Tom Clancy kind of movies, books out there.
Maybe you'll get a little premature Christmas present in your e-box.
I like it. So we're going to call you Mark Ludlum or one of those guys.
I don't know. You can call me anything you want. Just don't call me late for the stock trade.
All right. Well, now we're seeing a little bit of a sell-off here. It's a little bit of gas out of the engine here. Right now the Dow's off. It's out at 70 points.
Well,
but you wanted to take a look.
That was going to be my question. I guess it's a follow-up to the last caller. Steve, last on Tom's show, I think it was on the first hour, Tom had said, and this has happened in the market in the past, where when we have a down day and we lose about 2 or 3 weeks of trading in one day, do you foresee that in looking at the charts? And if you do, when do you think that will happen? Because we've been going up on air basically the last couple of weeks.
Yeah, it's a great question that you have. What I can see in a couple of markets, the sell-offs have been substantial to the downside. Specifically, the Russell 2000 that has had just some massive. The days when it has sold off, it has had just substantial volume to the downside. So yeah, I think that because you're dealing here with a market where there are very few. It's primarily bulls that are out here. Those of us that have tried the bearish side, we've been shot in the head a few times out here, and so you start to, so it basically becomes the underlying instrument. The great thing about having both longs and shorts in the marketplace is they can become natural areas of support out here, just simply profit taking and so forth. And so a marketplace that has fewer shorts in it, is not good. What it leads to is those days where you can take back, a month. You can take back 10 trading sessions or what have you. Timing it, though, that's the whole big thing out here. There are enough divergences in the marketplace. I'll give you one right now. It's called the VIX index. So you've had the market, move up massively. Right now, you've got the Dow is up 68, but the VIX index really dealing with the S&P options out there. So you got the S&P is up at 1676 right now. That's what you, in essence, were calling about. It's up 7 points, and the VIX is up 20 cents right now. The VIX is up 1 3/10%. To me, that is one of the what that is saying. As the market is moving up, option traders are willing to pay more for insurance to the downside. In essence, they're willing to pay more for insurance than, and that is a dislocation that just doesn't make sense out there. And right now, I'd say if the VIX closes up today, that's going to be a big indication that at some point in time there's going to be a rug pull. Now, I don't know, Mark, if it starts tomorrow, if it's Friday, if it's Monday. We're coming into a full moon lunar combination. Does that kick it off? It certainly doesn't look like it may be Uncle Ben and whatever he's saying out there. But there are enough divergences out here that just say, hold on a minute here. We had gold shoot up. We had Bob calling about gold because he's on the short side out there. And then, right now you've got gold is up 70 cents. So gold is giving back all of its gains from Uncle Ben. And so, we'll certainly go take a look at that. We could see the pattern that it was creating. So there are enough divergences on the daily charts that still suggest me that what we're going to see is we're going to see a pullback into about the 200-day exponential moving average or a little bit lower. But then we're going to see the market go ahead and take off from there. I don't think the market is done going up at all. But this sell in May cycle is going to happen at some point in time. Trying to pin that down, it's just really a matter of taking some trades and making sure you've got stops in place. I mean, right. I really don't know how else to better say that.
I think you'd answer it too. So anyway, Steve, thanks as always, and I'll send you look for an attachment in your e-box.
That'd be great. I'll look forward to that, and congratulations, and keep up that great work.
It will be in Microsoft Office format.
Okay, cool. That'd be great. Great. Thanks so much, Mark.
Talk to you soon, Stevie. Thank you so much. Bye-bye.
All righty. Thank you. All right, so folks, we've got a market here now. What I'm going to do is I'm going to switch over into that, that EKG, into that 30-minute chart on the S&P futures, so we'll get a feel for the bouncing around that we've got out here. But first, I've got what I do have up on my screen because Mark had called about the S&P 500, so I've got the S&P cash up on my screen. It's right now trading at 1679. You're seeing some horizontal lines going across the screen here. These are the primary trading ranges, trading range boundary lines. This is the fabulous work by good old Bud Rolfs out here. And as we take a look at that, you've got the S&P, which travels in basically 100-point trading ranges. Now, the daily, what I've got on my screen here is the daily chart. So as you take a look at the blue lines going across my screen out here, those are the daily trading ranges. The black ones happen to match up to what's on the monthly chart. And the monthly chart has 200-point trading ranges. Now, the way that my lines are drawn out here, I'm not able to hit exactly 1450 or 1550 or 1650, but it's close enough. But those are the numbers that you're looking at. And right now, the midpoint of any of those primary trading ranges, in this case here, would be 1700, the one that we're traveling in right now. So as long as the S&P closes up around these levels here, it says that it can go hit that midpoint, that 1700 area, before it would start to turn around. Now, if you just take a look at this stock chart here, when the S&P broke through the 1550 level, and it took quite some time to do that. It took from March 11th really until the 8th of April, so nearly a month out there. When it did break through that, you can see what the S&P did do is it got up to that midpoint level. It got up to a high of 1597, and 1600 in essence would have been the 50-point, the midpoint level. So remember, don't use these things as exact numbers out here, and then it went ahead and pulled back. So right now, if we just take a look at that same potential pattern unfolding, this would say to me, okay, the S&P 500 looks to me, and to answer Mark's question, where would be the next place that maybe you would take a stab on a reversal, might be when the S&P 500 were to get to 1700. That's if you're so inclined to try to play that side of the market. Or if you're long, your expectation should be, okay, once it gets to 1700, it'll pull back and test that 1650 area. And here's the key. You get it close below 1650, that says it wants to come all the way back down to the bottom of that range out there at around the 1550 level. So that's how you use this chart here that you're taking a look at on my screen out here. Let's go out to Bill in Springfield, Missouri. Bill, thanks for calling. Thanks for holding. How are you today?
Just fine, thank you. I was calling in reference, you covered the VIX a little bit while ago. About a week ago, you thought we ought to be short the market. I believe it was 1363, sell in May and go away.
Yes.
I think that the 200 moving average, what do you show on your 200 moving average? I've got 1309.
Now, what are you looking at? You're looking at the VIX?
Yes, exponential, 200 exponential moving average.
Okay, so I'll pull the VIX up on my screen here. Now, first, one of the keys here, Bill, that I think that you want to pay attention to is the 50-day moving average on the VIX. And so right now the 15-day is at 1344, and we're at 1347. If you get a close above that with conviction, what the VIX would be signaling to us is that we would be very close to seeing a market reversal. So are you watching us on Tiger TV by any chance?
Yes.
Okay, so I've got the top of my chart here is the actual VIX index, and so it's going to cross it on the top. I'm going to pull it down just a bit. That's the 50-day exponential moving average. And what you can notice here, I'm going to come back to this day of May 4th. So on May 3rd, this is 2012, so we're going back a full year. So on May 3rd, 2012, you had the VIX close at 1756. The 200-day exponential moving average was 1774. It actually got up into that level. And the very next session, you got above the 50-day moving average. The bottom of my screen, Bill, if you're watching it, is the S&P 500. See how the correction really began back there in May? And that's when the VIX got above that 50-day exponential moving average. Now let's come back and let's take a look here when the VIX gets above the 50-day moving average, right back here on the session of, let's come back to right in this area, which is October 19th of 2012. And that day you had the VIX really move with wide price spread through that 50-day moving average, and you can see that also went ahead and led to a correction. So be paying attention. Now I'll answer your question with regard to where's the 200-day exponential moving average. I'll go ahead and put that on my screen. But I think the one that is a better indicator for you as to possible things to come is actually going to be that 50-day. As I put the 200-day on my screen right here, the 200-day is maybe what might hold it as a resistance level, and the 200-day right now is at 1516. I think that's right around the area that you had it marked at as well.
No, I have 1319 as the 200-day.
As the 200-day, I've got the 1516 would be the 200-day exponential moving average, and then I show the 50-day at 1344, at least on my system. So it's if you use the VIX. Now there's a lot of different ways to use the VIX out here. It's also not natural to see the VIX here making these higher lows, and that's what it's been doing. But what I like to use the VIX for. It tells you a lot about liquidity in the market, tells you a number of different things, tells you that options traders are willing to pay more for insurance right now in a market that's going up. That is not typical behavior. But what you can see is that a number of corrections will start when the VIX gets above the 50-day EMA. It's not above it just yet. It's at 1350 right now. Well, it's just above it right now, 1344. So a strong close on the VIX today is a pretty important signal, in my opinion. All right?
All right. Okay. I was just understanding the 200 thing. All right. Thank you very much.
No problem. My pleasure. Thanks so much for calling. We get back, we're going to go out to Denton, Texas. We're going to take a look at Apple with Walt. We'll be right back, folks.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. The Dow's up 61 points right now. S&P is up 6, and the Composite's up 7. Apple Computer up 368. We're going out to Denton, Texas, to Walt, and take a look at Apple. Walt, thanks for calling. Thanks for holding. How are you today?
Just fine.
That's excellent, excellent. Glad to hear it. You wanted to take a look at Apple. Tell me what you're doing, how I can help you out here.
I have a kind of like the guy who called earlier about the gold. I have a position in Apple, which is a short position, and right now it's out of the money.
Okay.
Apple looks like gold is falling. I'm hoping that Apple falls also, but I wanted to get your take on it.
As we take a look at Apple here, you know, it's had a decent bounce here off of the lows from April the 19th out there. It went ahead and ran into resistance, which was its recent swing point from March 25th. So as it made that first run up here on the March 25th, that had 17 million shares and was coming up there with 17 million shares, so wasn't able to really bust that out. The low here that this thing has been able to get back to, if we take a look at the pullback here, coming off the lows to the highs, so far what it has done is, pretty close to a 0.618 retracement on the way down as it got down towards that 415.91 level. It actually got to 418.90. Now as we take a look at the move up, it's really been on light volume over the last three trading sessions, meaning nothing significant. It's been averaging I won't say light volume, I'll just say kind of normal volume lately with about 16 million shares here. Now on the way down off of that little high out here from May 7th, you haven't seen any kind of expansion of volume to the downside. We saw one day, which was May 15th, 26 million shares to the downside, and then on May 16th. So, what's the time frame that you're in on your option? What's the expiration? Next month, or
it's end of the month.
End of the okay. You know what? So when we take a look at Apple right now, here's where when I take a look at relative strength or relative weakness on this, what we're taking a look at here is it could go either way. I'm not getting a clear read on Apple. We know that it stopped at that resistance level. You don't want to see this really get above the 469, full count 470. If it gets above 470, what you could see inside this equity here is a move up to close the gap. So I can tell you don't want to see that, and that would take it into about the 504 range. You have that big high volume downdraft from January 24th, and that's really what's been holding it in checkout here. It's got 52 million shares to the downside. What you'd really like to see is it get back inside this bar here from April 17th. That's got 33 million shares. But the last time down here, which is where it made its low, it was 21 million shares, and that was on the 16th. So it didn't have enough volume to get back inside here. Almost looks like Apple's going to consolidate between the area of about 420 to the 465 level right here. And that's really all the information that it's giving to me at the moment. And I know that may not be what you want to hear, but that's the only information that I see right now, when I take a look at the stock chart on Apple from a technical basis.
It looks like on the two lines there, the 20-day and the 50-day, looks like are converging right about where the price is. They are.
There is a little bit of a convergence here for sure. Longer term, that 200-day exponential moving average, that is likely going to be a pretty significant area of resistance. It certainly has been since the beginning of the year, or at least since December. So, Walt, I hope that helps you, and have a successful day out there. Folks, stay tuned. Basil Chapman is up next. What is bound to be a day of a market moving up and down. I look forward to seeing you tomorrow, folks. Have a great Wednesday. Take care.